Hey, let's talk about divorce and how it affects your credit. Thanks so much for being here with me. In this episode, let's talk about divorce and the impact that it has on your credit. I've got a couple of tips to help protect your credit if you are considering or if you are going through divorce. So let's dive in. Tip number one, first things first, go and open up your own checking account. So if you have a joint checking account, you need to stop using it immediately. Open up that checking account and start getting your direct deposit from your income over into your new account. You need to start separating funds immediately. And although it only takes one of you to close that joint account, it would be very dirty if that was you that went in and wiped out all of those funds or closed it off so that your future ex no longer has access to that money, especially if that's the operating account in which they're paying their living expenses out of. You don't necessarily want to be abrupt and just close it off. What I am saying is start a new account that's only in your name, start getting your direct deposit over there, and then if you have legal representation, please talk to your attorney about what to do with that joint checking account and follow their advice on that, okay? Next, I want you to go to annualcreditreport.com or Credit Karma, Equifax, wherever you look at your credit reports and spend some time there. Anything that is you have co-signed for, that you are a joint owner of that account, or if you are an authorized user on the future ex's account, you really want to start separating all those things off right now. So a lot of times, some people will co-sign for their spouse's auto loan or, I don't know, student loans, anything like that. If you are a co-signer, you are legally obligated as well. So you're going to want to see about getting that refinanced off where it's in the ex's name and no longer in your name. If you guys have a joint mortgage together, joint auto loans together, somebody's going to have to either refinance or sell. It's the only way to get your name off of that debt or the ex's name off of that debt, depending on how you're going to split it. So just make sure that you know that. The other thing is pay your bills on time. I know that sounds so silly, but you can get really, really distracted going through this process. So one late payment could really be devastating on your credit history. So make sure that you keep a tally, a list of everything that has to be paid every single month, and make sure that you're keeping on top of that. I want you to look at your statements. So whether it's your bank statements or your credit card statements, go through it line by line. First off, you want to make sure there's no fraud or that the ex is using your what if, they had an extra card of yours that is attached to that credit card and they started using it before you closed up that card or got them off of there as an authorized user or something along those lines. So look at your statements. There also might be some like auto pay that isn't really yours. So it might be a subscription or something along those lines. Make sure you say, hey, to the ex, go ahead and start taking over that payment. I'm not going to pay that on my credit card or out of my bank account any longer. So look at the activity that's going on. If you don't, something could wind up there month after month after month, and then it's a lot of money out of your pocket in the meantime. So I want you to freeze your accounts. When you freeze your accounts, that means no new credit can be opened in your account in your name. Now, if you are getting ready to do a refinance for that auto loan or that mortgage, go ahead and have them pull that credit first, and then go in and consider freezing your accounts. Now, talk with your mortgage loan officer or the banker in which you're going to do your business with, because if your if your credit is frozen, they might have to do a credit pull right before finishing up that mortgage loan application and turning it into a loan. And if it's frozen, that could interfere with your closing. So make sure you discuss that with them. If they say, hey, hold off on freezing your accounts until after we're done, and then at the end of that, please freeze your accounts. It protects you, because think about this. Your spouse knows your social security number, your date of birth, all this information about you, and could go and start credit in your name, but have that credit card mailed to a different address where they could take advantage and start maxing out credit cards. Who knows? I've seen some really dirty things out there. So that's a great way to protect access to your credit. Another tip I want to share with you is please avoid putting any bills on your credit card. It's really easy to pay for attorney bills on a credit card, and it seems to be our default go-to behavior. But I'm telling you, it's going to cost you a lot more over time. It could not only add all of the finance charges if you're not in a position to be able to pay that off in full before the next bill statement. But in addition, if you max out those credit cards, you might see your credit scores fall. And if you are, say, applying for a mortgage refinance or an auto loan refinance, if you have a lower credit score, you might wind up paying a higher interest rate. And that's where it becomes this double-edged sword. So we really want to make sure that you're not maxing out your credit cards. Try not to pay your bills on your credit cards. I know a lot of people feel temporarily better by going out and going on a shopping spree or revenge buying on something, going out and getting a makeover to feel better about ourselves. But be careful about where your spending is going, because again, maxed out credit cards will have a debt utilization issue and will really pull your credit scores down. So be careful with that. And just know that a divorce does not override the contract that you have with any lender. So if you are both on a loan together, really the only way to terminate both being on the loan is either doing a refinance or selling that item and paying off that loan. So that's really the only two ways to go: paying that loan off in full, typically by selling it, or if you have the cash money, or doing a refinance. That's the only way to override being a co-signer or somebody who's obligated on that loan, even credit cards, any of that. So next tip, I want to make sure that you follow a written budget. You are likely going from a dual household to a single household as far as income. And so that also means not only does the income change, but your ability to be able to do some things around the house may be hindered. So in other words, now that you are taking care of your own household, whether that's a bunch of kids, dogs, or just your actual home, there may be some things that you aren't able to do on your own, or maybe the ex-spouse was the one that handled those jobs. So a couple of things: house cleaning, lawn maintenance, pool maintenance, those kinds of things, pest control, they may have been handled between the two of you, and now that might be something you need to outsource or hire for. So make sure you add those additional costs into your budget, your household spending plan. I see a lot of times that probably being the hardest shift when it comes to your finances is figuring out how to pay all of these bills off of just one income earner that's coming into the home now. So you're going to have to look very carefully at your spending, which means you have to write it all out. I know it feels like homework, but write it all out. Make sure you see where your money is going to. So look at your take-home pay, and then look at where your money is going to. And what's going to be important in that is you're going to see the outflow and you're going to go, oh crap. Wow, no wonder I have balances on my credit cards that I can't pay off. I need you to look at where you can cut. So where you've been spending money, where you can shave it down a little bit, where maybe you can negotiate with somebody. Maybe the same lawn person has been mowing your lawn for the last 10 years. Maybe you can say, hey, can you cut me a little bit of a break until I get back on my feet again? There are some costs that you can negotiate. There's some things that you can shave down. Maybe you've got $100 a month in your cable and your Wi-Fi, right? Maybe you can call that company and just say, hey, is there a different product or program? I really need to reduce my outflow here. What other kind of options do I have where I can reduce my costs here every single month? I hope these tips have given you some insight as to your first steps on how to protect your credit. I'm so very sorry for what it is that you are going through here. I know it's emotional, I know it's physical, and I know it is a financial burden to go through this change. But I wish you peace and love through it all. And if there's anything that I can do, please reach out. I'm happy to answer some questions at questions@creditkristi.com. I also have a credit podcast designed just on credit. So if you'd like to join me in the podcast world, you can search for Credit Coaching by Kristi and find me there. But love to see how I can help you and walk through your journey. Even though it's a challenging one, I know you'll get through it on the other side and be better for it. So I wish you the very best.